Welcome to your U.S. market recap for Thursday, February 19th, 2026. Stocks pulled back today after a run of gains as rising oil prices and cautious signals from policy and economic data weighed on broader risk appetite. The session closed with major indexes slightly lower, snapping recent winning streaks, while energy and safe haven flows grabbed attention amid geopolitical risk and hawkish cues that rattled some traders' expectations. U.S. stocks slipped late in the session as oil prices rallied towards 6 month highs on escalating geopolitical tensions, particularly in the Middle East, which lifted energy equities but also undermined broader market confidence. Energy's strength was offset by weakness in tech and cyclical sectors, with the Dow Jones Industrial Average and S&P 500 both dipping, and the Nasdaq also giving back earlier gains. The idea that oil's ascendancy might feed inflation pressures and delay or restrict future rate cuts put a dampener on equities. Today's move aligns with broader market dynamics, in which traders are reacting to hawkish Fed minutes and slowing rate cut expectations, which have encouraged caution around risk assets. Recent minutes from the Federal Reserve highlighted unease among policymakers about easing too soon, and that sentiment has reverberated through equities and fixed income markets. This hesitancy around rate policy has been a recurring theme, and it continues to be priced into both bond yields and equity valuations. Fixed income markets were active as yields moved in response to soft demand at Treasury auctions that coincided with Fed reluctance to commit to immediate rate cuts. This combination pushes some capital out of bonds and into commodities such as oil and gold as traders seek inflation hedges, even while equities show mixed momentum. Commodities again played a significant role in today's price action. Crude oil climbed more than 2%, extending its recent rally as geopolitical reports, including potential U.S. military decisions and supply concerns, kept risk premiums high. That move provided a cushion for energy stocks, but also pressured rate sensitive sectors such as financials and consumer discretionary names as traders worried about the inflation implications. Across indexes, the pressure wasn't extreme but clear. The S&P 500 and Dow snapped multi-day winning streaks, and the Nasdaq lagged as technology and growth stocks retraced part of recent gains. While energy and some defensive plays held ground, broader momentum faded through the afternoon session as investors digested the combination of geopolitical shifts, hawkish central bank signals, and mixed macro cues. Crypto markets felt the tug of macro caution as well. Bitcoin and major tokens traded softer amid the same rate and geopolitical pressures, reflecting the broader risk-off tone despite crypto's reputation as a risk asset rather than a safe haven. Digital assets traded in contained ranges rather than breaking out, highlighting investor hesitation ahead of key economic prints on employment and inflation later in the week. Corporate news was less of a headline today, but still contributed to sector rotation. Retail and consumer names showed choppy trading patterns, with guidance from companies such as Walmart earlier this week influencing sentiment, while other earnings catalysts continue to be priced in as we approach the next major reporting cycle. These individual stock moves underscore the nuanced environment where macro narratives often overshadow company-specific fundamentals. Looking ahead, all eyes remain on key macroeconomic data due tomorrow and into the weekend, particularly the January non-farm payrolls report and inflation gauges, which could redefine the market's expectations for the Federal Reserve's path. If employment and price data come in stronger than expected, it could reinforce the view that rates will remain higher for longer, putting additional pressure on equities and risk assets. Conversely, softer data might reignite speculation that cuts are more likely later this year, offering support again to stocks and select high beta sectors. For commodities and crypto, direction will likely hinge on both data and geopolitical developments. Oil prices remain sensitive to any escalation or de-escalation in the Middle East, and crypto's correlation with macro risk sentiment means that bonds and dollar flows will continue to shape digital asset moves. That's your U.S. market recap for February 19th, 2026. Stocks booked a modest pullback as oil rose and risk pricing shifted on hawkish signals. Bonds showed mixed demand and traders braced for tomorrow's data. Stay tuned as jobs and inflation reports hit the tape. They may be the defining drivers in the sessions ahead. Remember, if you like content like this, please don't forget to like and subscribe. We'll see you soon.